In this video, 3 distinct cryptocurrency day trading strategies. I'm going to give you what each one is, then show you how you'd go ahead and trade that strategy with the live Bitcoin chart. And I'll tell you the pros and cons of each, including my own experience with each, because I traded all 3 of these strategies for clients when I was working at my firm. Before we get into the video, if you haven't got Binance yet, you can download it with the link in the description. That's the trading service I'll be using. And you can pick up $40 free Bitcoin when you download Celsius wallet. I use Celsius to earn passive income on my long-term Bitcoin. Get $40 free when you download the app and use my code in the description. As we come to the Bitcoin chart, the first trading strategy that I want to talk about is called swing trading. I've got some notes here so you can see. Now, swing trading can be short or medium term. It really is up to you. A lot of traders use it in a different way. But really, swing trading is really just taking bets on the market for either short or medium term. You can trade over a period of a couple of days or maybe even up to a couple of months. And it's named swing trading because we are looking to take advantage of these longer term swings in the market. And you'd be able to identify them quite clearly. This would be a great area for a swing trade. You have big swings up here, and they really are trying to look for areas and times when you can get in and then obviously ride that trade into a profitable trade. It doesn't have to be in these big swings though. You could actually enter a trade right here as a swing trade and then obviously take advantage of this move right here. There are many ways to enter, but a swing trade is really looking for price trends and price patterns. There's also a couple of different ways that we can use it. We can actually use technical analysis to confirm our entry and exit points. So definitely we want to use that to make sure that we have a secondary bit of information to enter into our trades. But also with swing trading, we do have to take the macro environment, news and everything into account. Because if we are holding trades for maybe a few days or a few months, then it's not just going to be technical analysis that helps us out. We are going to have to take account of news and events and other markets that can affect our trade. So here's a potential strategy that you can use as a swing trade. We're going to come to the chart. Then we're going to make sure that we're on the 1-day chart, as you can see here. When you're swing trading and you're looking for entry points that you're going to maybe hold some Bitcoin or other crypto for a week or so, you're not going to be looking at 4-hour charts. You're going to be looking at the 1-day. If the 4-hour or 1-hour chart helps you a little bit more to really dial in your entry point, you can do that. But with trades like this, it isn't so much intraday movements that we are looking for. We can go through and identify the trend. So what I've done right here, as you can see, is actually put the 200-day moving average. So I'll just take that on and off right here. So we can go to our format right here, and I've just chosen the 200-day. For me, the 200-day gives a very good overview of the broad trend of an asset. So you can obviously see that the broad trend in Bitcoin right now is an upward trend, even though we're getting a little bit of a pullback right now. This pullback is around about 25%, as you can see, 23% here, but we've had pullbacks that are very similar. So this was a 24% pullback. And then down here at this level, we had about a 25% pullback. So this is very normal for the Bitcoin chart, but the 200-day moving average shows us that Bitcoin is in an uptrend. I often choose a 50-day chart as well, so we can come here and just put MA in here, click moving average, put that on. We can then go to format, and I'm going to change the input right here to a 50-day moving average. This gives us a closer look of things, and you can definitely see that Bitcoin not only has pulled back to this 50-day moving average at this point, kind of at this point as well, definitely at this point. This was often a catalyst for a next move up. You can see that Bitcoin has broken through that 50-day moving average now. So that really means we're looking at different areas of support. We're definitely looking at this area as a level of support for the price of Bitcoin right now. So how would I go into this as a swing trader? Well, really, there's 2 options that you can go ahead and do. Firstly, you can use this area as support and maybe accumulate some Bitcoin. So you may enter some limit orders around this level at 50,000. You might want to enter another limit order just under that. And then you could accumulate some Bitcoin around this level, hoping that the malaise and all of the bad news about taxes in the States would actually clear up and we may get a bounce off of these support levels. Swing traders can potentially, though, also use this as a shorting opportunity. They could actually see that the next level of support in Bitcoin is actually at this level around 45,000-ish. They could therefore sell some of their holding of Bitcoin, or if they trade futures, actually go short some and try and ride this wave to the downside, having this level as probably a buyback level because that is where the currency found some support. And you can definitely see another area of support around this area here. As we can see, 2 ranges right here that the currency traded around over about 3 days, and then slightly low here. So there are 2 areas you could look at, either to accumulate some Bitcoin looking for it to bounce, or if you were a little bit more bearish, actually looking to sell and short, looking to buy back at these two levels, as that's where support might be. There are some other technical analysis techniques that we can use, and I'll get onto those when we talk about the other strategies. So you can use those to actually enter into some trades when you are swing trading. The pros of swing trading though, is that it takes way less time in front of the computer screen. You can set up a trade, you can set your stop losses, which I always recommend, and then just really monitor the situation over the short term, but you don't have to be trading every day. It is also quite simple just to take some bets, looking at the bigger picture over weeks and months, looking at those big areas of support and resistance, and then placing your trades accordingly. The cons of this strategy though are that you carry risk overnight and over the weekend. Things can happen. And so you're carrying risk over a longer term, whereas some other short day trading strategies, you're really in and out and you know your risk and you're not carrying any risk overnight. And another con is that you may miss on the really big moves. So let's say we were back here and we were swing trading and we were maybe buying in at a low, selling out at a high. Just imagine if we'd sold out right around here, which would have been a profitable trade for us, but obviously we would have missed out on this huge rise that we would have just been better buying and holding. So that is one of the drawbacks of swing trading, is that you do miss out on the bigger opportunities of buying and holding, but then obviously it gives you more opportunities to trade some of the swings of the market. The next strategy that we can use when trading crypto is called scalping. And this is a really ultra short-term strategy that you can use intraday. A typical strategy that you might want to use when using a scalping strategy is the 5, 8, 13 moving average strategy. I'm going to go through that now. It's actually really simple to set up. And once you do have those moving averages set up, it's really quite straightforward and you can definitely see the moves in the market. This is an ultra short-term strategy. You're not swing trading, you're not carrying positions overnight. You may even trade 10, 15, 20 times a day, which is obviously a lot, but it is ultra short-term. And basically what you're doing is trading around other people's orders that may swing the market. And really you're looking for very small profits and losses over the day, and hopefully the profits outweigh the losses. Coming back to the chart then, we're definitely going to change this from a swing trading strategy. We're actually going to take this arrow right here and we're going to look at the 5-minute chart. Now, when you're scalping, you can even look at the 3-minute, even 2-minute charts. I'm going to do 5 minutes just to show you here. Now what you can see is a 200 and a 50 moving average. Now, because we've come to the 5-minute chart, what we're looking at is a 200 period moving average. So each candlestick is now 5 minutes in length. So what we're doing is taking the average price of the last 200 5-minute candles, and this makes the chart look completely different. Now, the bigger and wider swings in the market have a little less impact on us when we are using a scalping strategy. What we're really looking for is these tiny movements in the market. So you can see them here, this move right here, and then this move. We have some big down moves as well. And we're looking at trading these intraday moves, entering and exiting our trades very quickly. So what I'm going to do is just zoom out a little bit. We're going to change our moving averages. I'm going to change this moving average right here in the format to a 5-day moving average. So I'll press OK on that one. We're also going to change the 50-day moving average to an 8-day moving average. So we'll press OK. Then I'm going to go and add a third moving average. So click MA, click on moving average. We're going to change this to a 13-day moving average. So we'll click on 13 right here and we'll just change the style to make the line a bit bigger. Now this looks really complex and there's a lot of lines and colors. So I'm just going to zoom in and show you how this strategy would work. We have to remember that we are in a little bit of a downtrend for Bitcoin right now. And so there are some quite major sell-offs overall. And so you can use this going short and going long. Essentially what we're doing with this 5, 8 and 13 moving average strategy is looking for the very ultra short-term trend. And that gives us an idea of what may happen with the price over the ultra short term. Remember now, because we're looking at the 5-minute chart, what we're essentially looking at here with these candlesticks is individual orders or groups of orders that are changing the market by very small amounts. What we're going to look for is for the 5-day moving average to cross over the other two moving averages, because what that means is that the very ultra short-term movement in the price is changing direction at quite a pace compared to what the price has been before. So remember, the 5-day moving average is this line, this sort of ultramarine line. And with the 5, 8, 13 strategy, what you would see down here is the ultramarine colored line actually moving up and crossing over the other two lines, which means ultra short-term prices are moving up, That suggests to me that a buyer is coming into the cryptocurrency. And if we know a buyer is coming in and changing the price short term, that means they probably have a big order and they're willing to pay up a bit. So as the ultramarine line crosses over, we could then enter into a long trade as we know that the price is moving up. And then we could try and take advantage getting in around this level and then obviously selling out maybe at a designated price, maybe at 0.5% profit or 0.25%, 0.3% profit, and then getting out around this level or a little bit higher. This could also be done for the downtrend if you think actually Bitcoin is in a short-term downtrend. And so I'm going to be going short or selling. What you can see is a period of consolidation right here where buyers are coming in, but they're not pushing the price up. Buyers are coming in again, not pushing the price up. Buyers are coming in once more for a third time and not pushing the price up. And you can see the ultramarine line right here, just crossing down over these two, could be seen definitely as an opportunity just to short the price. And you can see it happened here, and you could have obviously gone in around this level and then shorted it down to various levels. So really what we're looking for is the ultra short-term line, which in this case is ultramarine colored, crossing through the slightly longer period moving averages. And that tells us really where trade is and if big trades are coming in and actually moving the price one way or another compared to those other lines. This is one of the simplest ways to go about a scalping strategy with the moving averages. There are other technicals that you can use. You can use stochastic oscillators, even Bollinger Bands. I won't get into that though. This is a very simple one, but just to show you what scalping is. The pros of scalping is that you can piggyback off large orders and make some fast money. You get hundreds of trading opportunities throughout the day. You're not a long or short trader. You can even go long and then go short right after in that trade if you wanted to. You don't have to spend time on research or analyzing the news or any cryptocurrencies. You're really just trading other people's orders and the flow of those orders. However, the downside is that it requires a lot of time at your desk trading, and you need to be right there trading all of the time. Profits also are very limited per trade. These look like huge movements, but in reality, in the big scheme of things, these are very, very small movements overall. And so you're only making very, very small profits. Conversely, you're obviously not losing too much as well, as long as you have your stop losses in place. And another con of this strategy is that you may actually have a lot of trading fees that eat away at your potential profits. The next strategy I'm going to discuss is breakout trading. Now with breakout trading, what we're looking for is a breakout in the price of an asset that will hopefully make us some very good profits short term. And you can definitely see some breakouts in the chart. So this would definitely be a breakout right here. We can see this is definitely a breakout. This is definitely another breakout. We actually have a breakout to the downside right here. This is a potential breakout that we could take advantage of. A breakout is simply a big move, either up or down in the price of an asset. Huge breakout here that I'm sure a lot of people made a lot of money on if they were shorting. Breakout trading is a little different though than you might suggest. We're not waiting for these breakouts to happen, trying to piggyback off the orders. There are different ways to do breakout trading, of course, but one of them is to actually anticipate a breakout before it happens. And this is quite a good way of making sure that your risk-reward ratio is kept in check. So what exactly is breakout trading? We can trade with trends. That's obviously very important. If you're very disciplined trading with trends, what that would mean is that you possibly wouldn't take advantage of any of these short movements, these movements down, because if we look at the 200-day moving average, like I have on the chart here, we can see that absolutely Bitcoin is in an uptrend. And a lot of people that trade breakouts only go long if the price of an asset is in an uptrend, as shown by the 200-day moving average. As a trader, it's your choice whether you want to stick by that or whether you want to take advantage of moves down as well as up. One of the benefits of breakout trading is that you don't carry risk overnight. It's usually an intraday thing, so definitely a day trading type of strategy. And we do know the risk reward before we trade. But like I said, there are different ways of actually looking at this. So some breakout traders actually try to anticipate a breakout before it happens. So to do this, I'm going to show you the chart right here. Now you can see what's called a consolidation phase in the chart. That is a period of time where the price doesn't actually move up or down significantly. Between these 1, 2, 3, 4, 5, 6 days, it was actually a fairly sideways move. Now the chart moves up and down at around about a 10% move between the days. But you can see from this point right here, where we actually started this 5 or 6 day run, to this point right here at the end of that 5 or 6 day run, it actually only moved 2%. This is what's known as a period of consolidation. Now you can actually extend this as well, maybe a few more days, and you can see that the price at the start and the end of this move is only, let's say, 1.5%, 2%. That's what's called a consolidation, because over a period of time, price, even though it moves up and down, traders and buyers are sort of leveled out, and so they're not really winning, either pushing it up or down. Why this is important is because we use these areas of consolidation as areas where we could actually place trades in anticipation of a breakout of this consolidation phase. You can actually combine breakout trading with swing trading if you like, go for the 1 day chart as you can see right here and actually carry those positions longer. Or we can come to maybe, let's say, a 1 hour chart and you can trade these intraday as well. Now you know that right now, as of making this video, Bitcoin is in a pullback and definitely a move lower. And so what we can see here is actually a really good trend line. So I'm just going to draw this trend line right here, as you can see. So I'm trying to touch as many areas of trade as I can. So we're just going to draw this right here. Now this takes into account, I would say, this area and this area, because intra time period it did touch here, and then you've got another 2 touches here. Now what we know is that Bitcoin is moving lower short term. So what I'm going to do is actually draw another set of trend lines and once more try and touch as many points as I can. So maybe I'm going to come from this right here, and that seems to actually really level up for me. So I've got a point right here, this touches, and this touches. This is what's known as a descending wedge or a wedge pattern. You can use this either on the upside or downside to anticipate breakouts. This is actually a classic wedge pattern where we have levels of support. So I'm just going to draw those on. So this is definitely a support price. It went 3 times. So that is support at around 53,500. But then you can see that when buyers were coming in, they just weren't having any luck as well. So they tried to push the price up, didn't happen, tried again, and it actually hit a lower high. And then they tried again and the high was lower still. So it's coming down, it's a descending wedge. And this is an absolutely textbook example of when to enter into a breakout trade. Some traders do like confirmation before they enter into a trade. So that would be 1 confirmation here, 2 and 3. You could therefore enter into a trade around about this level. I'm just going to draw it with a straight line on the chart. So this would be the price that you could enter into a short trade. That's around 55,140. But what's great about breakout trading is that you have data in which you can put your stop losses. So you see these 3 levels here where buyers came in. You could very easily put a stop loss at this level here. The reason why we do that is because we know the price traded here around 3 times and never went higher. This means that buyers just don't have the potential to push the price higher, and so we can easily put our stop loss here or maybe even a little bit higher. And we know there's a lot of data saying that we're actually pretty safe with this, so that will be our stop loss, and that's not a huge amount of risk to take. But then we could potentially benefit from a breakout of this support level, and that's exactly what happened to the downside. So you can see the risk level compared to the reward ratio is pretty good. Now you never know where the price is going to go lower, and this was a good trade. It may have gone a little bit lower and then again, but this descending wedge pattern is a classic example of what a trader would actually look for when going into a breakout strategy. Pros and cons of breakout strategies is that you can have quick profits. You get a lot of data to back up your trades, as you can see here, which I just went through. You get day trading profits and you don't have to take risk overnight. And typically with breakout trades, you do get a good risk reward ratio. The cons though is that there are fake outs, which means you may get a big move to the upside like this, and you can see that your stop loss would be triggered. You'd get out of your trade and then it can actually go and move lower. So you were right, but your stop loss was a bit tight. You got stopped out the trade. So even though you were correct, your trade would have been triggered out and you still would have made a loss. That's one of the downsides of putting in type stop losses in general. We also have limited upside with breakout trading. Like I say, with every type of day trading, it may be more profitable to just simply go and run trades over the long term. So these 3 strategies can be employed at different times. They are not exclusive of each other. Breakout trading, scalping, and swing trading are all tools in your armory that you can use independently or actually at different points together, depending on how the market is. They all have pros and cons and areas that are better and worse depending on the type of market that we're in. If you do want to go ahead and trade cryptocurrency though, you can trade with Binance using my link in the description if you don't have an account with Binance yet. Do subscribe for daily helpful crypto content, and I'll see you in the next one.